You're here with Dr. Invest. So I'm here teaching my good friend Tim how to trade options. However, anyone who's interested in learning, I suggest you watch this full entire course because I'm breaking everything down in layman's terms, no sophisticated jargon, and I want you guys to take a small amount of capital, not large investments here, small amount of capital, and begin learning how to have your money make money for you, okay? We're working remote, but we also want to be earning a large amount of our revenue through other means than physical labor. So with Robinhood, I've chosen this platform specifically to teach you because it's a really easy platform to get started on. Later on, you can go ahead and migrate to things like WeBull, but I think for right now, Robinhood is ubiquitous as far as getting started, and you'll be able to pretty much transfer money and immediately begin trading. So here, I'm looking at a stock. Now, a stock is just an individual share of a company. It's pretty much any company who's not private. They're rather public, meaning they're willing to offer ownership of their company to the general mass. Well, they have stocks that are trading on platforms so that we can go ahead and ask for ownership of that actual company. Right here, I'm looking at Tesla, and it's valued at $238 per share. There are a lot of shares in the market. The more shares you have, the more you own the company. So with this being said, I don't want to buy shares. I'm going to trade options. What is options? Well, options is something a little more sophisticated. What I'm doing here is I'm pretty much going to predict what price Tesla as a share, as a stock, is going to reach before a specific expiration date. So today is currently, based on my calendar, let me look at it, is the 16th of August. No, it's not. It's the 23rd of August. Sorry. All right. So today is the 23rd of August. So on a Wednesday, 23rd of August, we'll have option contracts with specific expiration dates. So if you're looking at this Robinhood interface right now, and you head over to trade Tesla options, it's right over here. Well, once I click on that, I can go ahead and be sent to this page. Now, what this is a bunch of different orders I can make for different predictions of what Tesla will reach by here, expiration date, August 25th. That's Friday. Now, I particularly won't go for that contract because that expiration date is just too close for me. So I prefer to at least go a week out, maybe 9 days in this case. So that's September 1st. Usually these expiration dates are on Fridays. However, for certain stocks that are extremely popular, those might have more expiration dates like that end on Wednesday as well as Friday. So over here, if you've noticed, although this is sort of blurring out a little bit, you'll have call versus put. So put means I'm betting Tesla is going to go down. Okay, so we can actually earn money betting that Tesla will go down and not just up, right? So it allows us to have multiple predictions we can make to earn money. So here, if I wanted to bet Tesla was going to go up maybe to $238, right? That's maybe about 15 cents. Well, I can go to trade options. Let's choose a September 1st expiration date. I want to make sure that it's on call, even though you see put here, it's actually here. I think the UI is just acting up, probably because a lot of people are trading right now. But here, I'm on call. And now we have these different strike prices. Strike prices, imagine a bullseye. That's what I want my share price, Tesla, to hit, right? Do I want it to hit 240? Do I want it to hit 242.5? Do I want it to hit 245? As you can see, I do want it to hit 245 because I have 3 contracts that I've already bought betting that Tesla will reach $245 by September 1st, which is next Friday. Now, why did I do that? Well, I'll get into the news articles later, but pretty much I wanted to give myself a little bit of leeway there. The contracts were pretty cheap, and right now I'm already profitable, okay? So Tesla is only at $237 right now. Why am I profitable? Because I bought this contract back when Tesla was only at $233. So already, because I'm becoming a little more closer to my bet being accurate, the value of the contract that I paid for is now going up as well. Okay, so I want to make that distinction. So if we click on a particular contract, we can find out more information about the contract. Okay, so here, the bid, that's the cheapest somebody wants to pay for the contract. Just look at these numbers here. This is like multiple orders. I don't want you to go crazy, right? Multiple orders, but bid. The cheapest someone's willing to pay for the contract. Now you see $4.30. Ignore that. Move the decimal place 2 spaces to the right. It's really $435 for that contract. So why did they do that? Doesn't really matter right now. Just remember that. Every time you see these numbers here, bid, ask, mark, move decimal place 2 spaces to the right, and that's the actual price for the contract. Now you see how it's fluctuating because literally people are buying and the prices are changing based on the demand for this particular contract. So with that being said, there are multiple contracts you can buy. Now notice that the share price of Tesla is here. They're going to be calls that we can buy that are on top of the share price, and then there are going to be calls that we can buy that are below the share price. Why is that possible? Well, these are called in the money. Whenever you have a strike price that you're purchasing, right, a contract that you're purchasing where the strike price is below the share price, we call that in the money. Whenever the strike price is above the share price, we call that out of the money. Now, both of them are betting that Tesla is going to go up, but this one is like, well, I definitely know it's going to go up and it's not going to go lower than this. Pretty bold statement. So those contracts are a little pricey, but as the share price continues going up, even $1, you'll make like $100 on those contracts because the value of them are not only that they're correct, but they're super correct now, right? So that's the way I want you to think about it. Why are they giving us more money for this? I don't know. The market just works like this, okay? This is how it works. Just bear with me. It's a whole new industry. So what you want to do is go ahead and never go too high, although the prices get really cheap. Over here you can see the prices. Remember, this is a strike price. What I'm betting that the share price is going to reach. This is the price for the actual contract, which means this is the price I'm actually going to pay for that bet. So if I wanted to purchase it, what I would do is click on this plus button. And once I click on that, I can go ahead and hit continue. And it'll ask me how many contracts do I want to buy. So you can buy multiple contracts. Just buy one contract for now. Don't get fancy, right? One contract. Then I'll ask how much do I want to pay for the contract. So I can put 0.69, right? And why am I putting that number? Because that's the ask price. Well, now just change to 0.7. So if I put that number, it means that I'm guaranteed to get the contract because that's the highest someone's currently paying for this contract. If I put 0.68, it'll take a little longer for me to actually get that contract because that's the cheapest someone's trying to, or I guess the lowest that it's going for. So it'll be a bargain. So it won't be as readily available. I don't want you to like be waiting there and think you got a contract, but you really didn't. So I'd rather you just put, either the in-between price or just the ask price. So once you click review order, you can go ahead and purchase that contract. And then you just sit there as you watch it accumulate value. Now, if you wanted to sell a contract, I'll go ahead and head over to my current contracts that I have. So let's say these two contracts, right? Right now, let's say this one here. So this contract, if I wanted to sell it, currently all the contracts together, I think there are 3, are worth about $1,300, right? Starting with a small account, so I can show you guys, you don't need a lot of money to get started. You can work with a small account and watch yourself grow. So over here, you can see sort of the total value returning. I'm already positive $120 for the day. I can go ahead and sell this right now and see my profit of $120, $114. But if you wanted to hold it, then you can go ahead and watch it accumulate even more. But there's a risk involved, right? Because these have expiration dates. What happens if we have our contract on the last day? Well, if we reach the last day, let's say September 1st, and I still have these contracts, well, what's going to happen is they'll be worthless by 4 p.m. because that's the time that the stock market technically closes. So at 4 p.m., I will have an equity of 0. So whatever I put into the contract to actually get it, as well as what future value I thought it would go to, is gone, right? 0. So we usually want to sell before the expiration date, and that's something you want to keep in mind. That's why it's more volatile and prices are moving, because there's actually a ticking time bomb. Now, every day you hold on to the contract, you'll lose value on the contract because there's something called theta. I'm not going to get into that immediately, but that's something you should be aware of. Now, over here, if I wanted to sell the contract, maybe I want to just sell one. You can already see that it says sell to close. You can go ahead and click one contract. I'll put a price, and then it'll immediately sell at that price if someone's willing to buy it at that price. Usually what I do is I put a way higher price so that I don't even have to look at the graph. I just know that when it hits that number, it's going to sell it. I come back, I see my profit, I smile, I go back to sleep. So that's a great way that you can have emotional control, because if you're sitting there looking at the graph all day, you're going to end up making very impulsive decisions, and that's not the way you want to trade. You want to be very emotionless, you want to be very tactical, and you want to go ahead and trust yourself. Confidence is huge here. So another thing we want to allude to is, how do we actually look up stocks? So if you go over here, you can look up stocks by sector, by price jumps, things like that. I like to literally individually pick stocks. QQQ, let's say QQQ. This is a great start off. It just represents all of the tech companies that are doing very well in the stock market. So it's like an index of all of them, an average. And if you invest in this, then you don't have one particular company that can sort of ruin your option, right? And a lot of people also trade this, so there's a lot of liquidity there. So if you want to trade options, you can just go ahead and go to trade options here. And then if you want to bet that it's going to go up, and choose an expiration date. They even have expiration dates for literally today, just because it's that popular, but we're not trying to gamble here, right? So let's go ahead and let's say it was September 1st. I go head to the September 1st expiration date. From there, I can click call. I don't know why, again, it's blurring out like that, but here we have the strike prices. If I see that the price is here at, I can click on it. Now that says 369.04. Well, what I can do is go ahead and choose 370, saying, all right, it's only got to go up $1. I'm pretty much correct, right? That's out of the money though. If I wanted to be super safe and still earn money, what I can do now is choose an out of the money call. So that's below, or rather an in the money call. So that's below the share price. When the strike price is below the share price, we're talking about in the money. Okay, so we can go ahead and choose one of those. It'll be, remember, move the decimal place 2 spaces to the right. So it'll actually be $533. And if I want to buy, I can go ahead and do so. Now, my buying power is already tied up in Tesla, but I want to just show you guys how to trade. As far as why I got into Tesla, well, Tesla has a lot of positive news surrounding it. If I go to Tesla news over here, what we're going to do is look at a few things here, an article. Okay, so shares of Tesla are taking an upward swing this week with gains, blah, 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 blah. Baird analyst Ben Callow put Tesla on his best ideas list. Not really stuff that I'd really trade on. But what I did like is that Tesla is already beginning to push out the Cybertruck, okay? The Cybertruck is literally a huge product. It already has a lot of pre-orders. People are excited about this truck, okay? Any news about it, Tesla starts spiking up immediately. Now, there was some bearish news that came out yesterday saying that the number of Teslas as far as production each month was going to be smaller because of some gigafactory in Germany, some production issue. But that was just some news that sort of wanted to have the share price go down, because sometimes you have guys who buy puts in the market, so they, would benefit if any negative news came out about the company. But look, I'm not, a saint here. All we're trying to do is choose the right decision. Is the company doing bad? Well, let's buy a put. Is the company doing well? Let's buy a call. The recent news come out, well, then we can actually get into a play. So don't just get on to options just because you like the company. No. Wait for galvanizing news to come out, and that's the best time you want to trade options. So I just want to give you guys sort of like a quick rundown as to how things work. Again, if I want to look up Tesla here, and I go over to options, I can just head over to trade options, and I'll be able to see all the options here. If I want to bet Tesla is going to go down, I can go ahead and say put, and I can choose an expiration date. Let's say I'm betting that's going to go down to 235 by September 1st, next Friday. But I can choose this 235 call, and as it continues heading downward, this premium will continue heading upward, and then I can sell it at a much higher profit. So that's options trading in a nutshell. It's not really that complicated, but the amount of gain that you can get for a small amount of capital investment, I think, is immense. So definitely check it out, and I hope you guys enjoyed that. Talk to you soon. Now, why didn't I sell? Because I have a particular price point I'm waiting for, and I kind of have a good feel of where this is going. It's probably going to head to like the 250 range. I'll probably do an update on that video just so that you guys can see whether I was correct or not. But I hope you guys enjoyed that, especially you, Tim. Talk to you soon. Bye.